Y'all, I was on a roll. I was live earlier and the sound was not working. So now the sound is working. So I'm glad to get that technical difficulties out of the way. So today I want to talk about financial analysis, ratio analysis. What are the common analysis that are used, like ratio analysis that are used for companies? So this can, some of these ratios can be used in like your personal life, but so you'll be able to see like how it's used. But it's a very high overview, like a just a way high, like like an overview. So it's not just overwhelmed with so many details and so many analysis, because I love doing that sometimes, but I'll refrain. So let's talk about one of the what types of ratios that are used. And the first one I'm going to talk about is the liquidity ratios, right? What is liquidity ratio? So I'll give a textbook definition. So it refers to the availability of resources to meet short-term requirements. So what does that mean? That just means, are you able to pay your bills? In the company sense, is the current amount of cash or the current assets, is it enough to pay the bills, the short-term liabilities, the bills that the company has every month, like the short-term liabilities? That's literally what liquidity is in a simple sense. So even in your personal, you can apply it. Hi, do I have enough cash assets to pay for my bills that I have every month? That's what liquidity is, right? And then also, like what assets do you have that are liquid? Even if I take it in a personal sense, we talk about cash. That's the most liquid form, right? And then also you may have stocks, you may have CDs, you may have money market funds, and those things that you can easily turn your assets into liquid, into cash, right? So one of the things that may not be easy to turn into cash, like real quick, may be a house, right? It may be a car. Yes, you may sell it fast, but as far as it being turned into liquid, like a money market fund, just those things like that. When people owe you money, right? That is your liquid assets, right? So if you're a company, if you have invoices, that is part of your assets, your current assets. Promise I wasn't trying to get too much into detail, but I'll take it back a little bit. That's what liquidity is, right? Working capital is a big equation. What is working capital? That's your current assets, paying the bills, right? Whatever assets you have, paying the bills. Whatever cash you have, basically paying the bills. The second type of ratio analysis you have is your efficiency ratios. What are efficiency ratios? Textbook definition says refers to how productive a company is in using its assets. So um meaning if you're not efficiently using the assets that you have, it's like the lower your efficiency is. Like, you want to know that everything you have within your company or within your home or within your personal life is actually giving a return. It's actually being productive for you. For instance, if we're looking at companies, you're looking at accounts receivable turnover. What does that mean? How quick can a can somebody pay you an invoice? So for companies that have a lot of invoices that are outstanding, accounts receivable turnover allows you to know, like, basically, how quick can you turn your invoices or the people that owe you accounts receivable into cash. So that's kind of like liquid, right? How liquid is it? Does it take them a long time to pay you for it to turn into cash, or is it a very short amount of time? Also, you have your inventory turnover. You don't want inventory just to sit for a long time. So it's important that inventory turnover is basically looking at your liquidity, and it's looking at your efficiency. How efficient are you being with the inventory that you have? Are you turning that into sales? Are you turning that into cash? And so those are some of the things about liquidity and efficiency. The third, so we talked about liquidity, number one. Number two, efficiency. Number three, we're looking at solvency, right? Solvency refers to the company's long-term, long-run financial viability and its ability to meet long-term obligations. So we're looking at mortgage, right? You look at the different capital structures, right? I won't even get into capital. Sorry. See, my brain, I can easily slip into accounting, and then it's like, wait a minute, what are you talking about? So solvency. One of the easiest ways to tell, even in your personal life, guys, is how much debt do you have and your net worth. That's why it's important as an individual, you know what your net worth is, right? You know what assets that you have, your house, your car, anything that you own, and how much, like if you were to sell it today, how much would it be worth versus the debt that you have. And then if your net worth is positive, you get to see like, okay, am I making money or am I in the hole, right? You get to see either way where you stand. And so if you have any long-term obligations, main things I can think about is it's going to be your car notes, right? Or your mortgage. Those are some of the things that you can look at. I'll just leave it there. Debt to equity ratio. If you have a big debt to equity ratio, and if you're a company, if you have more debt than you do equity, then you may want to check that out, right? So, another thing that means you have a lot more debt. So, long term debt, right? That means you have to pay back for a longer period of time. The fourth one I want to talk about is your profitability, right? Profitability refers to a company's ability to earn an adequate return on invested capital. So, what's an adequate return? We're looking at profit margin, right? What's the profit margin? That's probably going to be one of the things that you want to look at is what is your profit margin? Even on a personal sense, you create your financial spending plan, right? You create your financial plan. You look at what you're bringing in, what you're pulling out, how much do you have at the bottom? What's like your net, what's your excess or what's your deficit? Where are you at? So, as a company, you want to see that your net income over your net sales will see what's the profit margin, how much of the amount that you sell something for. So, let's just say that my net sales, let's just say it's just a 100,000 and my net income is $10,000. Well, that's very low, right? That's like a 10% like profit margin, which is not good. So you want to see like where you compare as far as industry trends, and see whether or not if you can bump up the profit margin. Another thing is return on assets. Are you making income based on the assets that you buy? So if I just went out and bought all these buildings, I'm not talking about to rent or anything, but if I was a company, if I bought a building and I'm not making as much sales or assets or net income or profits, then I have to relook at, okay, are these assets helping me produce something, right? I know Robert Kiyosaki talks about if it doesn't produce a cash flow or income for you, is it really an asset, right? I can go into the technicalities of that, but you really want to look at, especially if you have a company, okay, what assets are helping the profitability of this company? Anything that you have, even within your life, right? If I was to bring it to your personal life, right? You have to look at the assets that you have your home, your car, your clothes. You know, you got to look around. Okay, are these assets around me? Is it helping me be profitable, right? And if it's not, what can I do to change the assets, right? To be more efficient on my assets, right? What do I need to declutter? So there are just things that you can think about that can help increase your profit margin. Profit margin is big. I mean, regardless of what people say, like if you have more month than money, you got to flip it around. So you got to flip it, right? So you can have more profits, more money at the end of the month so that you have more wiggle room to like be profitable, and to pay yourself. So that's it. I- well, yeah, that's all that I'll go. So again, I talked about liquidity, I talked about efficiency, I talked about solvency, and I talked about profitability. So you're welcome for the accounting lesson. So if you guys have any questions, just let me know, put in the chat. inbox me or whatnot. God bless y'all. Y'all have an amazing night. Got to make sure these kids are asleep. I think they are, but God bless y'all. Y'all have a good one. Bye-bye.